Do you guys have any, stats off the top of your head in terms of, savings on LOEs and how much, the typical EMP spends on a horizontal wellbore? Do you guys have any of that off the top of your head?
So as we had mentioned just earlier, what we saw in terms of the savings with our product is in that 15% to mid 30%, averaging closer to 20. And so with that, we know that 20% is not insignificant, especially when on your LOE, that electricity is one of your biggest items, right? So being able to move that by any sort of double-digit percentage, we know is quite a bit. In some of the example wells that we were looking at, we had a customer that had one site that was consuming $10,000 a month on or about in power. Yeah. And so, our savings there were noticeable, right? And meaningful in that. That was, of course, across multiple wells, but, you can see that these are tens of thousands of dollars that are being spent on a regular basis. Aaron, you might have some more experience.
So what I was going to say, well, the OSS product from an ESG perspective and, savings perspective, power's priced differently at different parts in the country. We're seeing some E&P companies in the north, for example, where they're actively trading energy on a continual basis, so they're getting it real cheap. So the OSS product may not be applicable to them, where the savings aren't going to be that great. There's other parts in the country where they're spending $80-90 million a year on electricity alone, and in which case OSS is ideal for that particular place in the oil field. Yeah. In terms of the ESG and to build a kind of strategy and using that in our strategy, it's entirely dependent on our clients' commitment to ESG. So you guys will probably be more than aware, Exxon, BP, Chevron, the big super majors are very committed to ESG initiatives. Yeah. But some of the independents aren't. It's obviously going toward that direction, but that's not necessarily something that we build into our primary strategy when targeting those guys.
Yeah, absolutely.
Do you guys sell these? Do you lease these? How does that work?
Really good question. So, historically, we've just sold them, right? Just so straight sales. We've now innovated a little bit on our model, and so we for our ERT, our newest product, we're actually pretty excited to be offering it through what we call a hardware as a service model, to where if a customer signs up to work with us, we would install the unit on one of their sites and then charge a minimal base rate. A common term we use in the industry would be a standby rate for the unit just to be there on site. And then whenever it kicks on to provide backup power, the customer is paying an event charge. And so what that does is it puts us and the customer shoulder to shoulder to making sure this thing is creating value and saying we're only going to bill you when it's actually in use. And so we've been really fortunate that with some of the pilots we've been doing, that has helped the conversations of customers go from pilot to actually purchase, because we're sensitive to the fact that CapEx spending is different in this market than it might have been a year or 2 years ago. And, whenever there's new technologies, there's certain risk that companies think about. How do I know if this is going to work? How do I know if it's going to provide the results that you're saying? And what we can say is we'll prove it. We'll put it in and we won't bill you unless it is creating value. Yeah. And so that's what we've done with our ERT unit. On the OSS unit, our older units, our first product, like I said, that was historically sold directly. We are still selling them outright today, but are also now offering rental rates on those. So if a customer wants to install them, then we will happily work with them on a rental agreement to do so.
So is there currently like a software and analytics component to that, or is that something you guys are thinking about? Just because it's top of mind with having Revo in here the other day and all the analytics they're able to pull off on the flowback and the well testing side.
Yeah, really good questions. We talked about ESG as being a growing way of thinking in this industry. Data analytics, AI is becoming one as well, right? So front of mind for a lot of folks. Our ERT system is actually designed with some cloud-based technologies that give us a dashboard to look at, so we can understand how many power interruptions a customer might be having. In addition to wanting to report that and work with our customers, we need it to bill on the hardware as a service model, right? So we're able to get this data, and depending on the customer, we work with them if they have kind of IT security requirements. We'll work with whatever they need, but in kind of our prototypes, we're able to dial right in and see those dashboards, and so be able to generate reports and use the data from what we're kind of seeing kind of in the future, we hope, across a large field to be able to help a customer understand you're seeing 10 events in this area every week and only 2 over here, right? And so you must have a power difference between the two, and they're on the same grid. So what could be causing it? Yeah. And so we hope to be able to use the information gathering to provide intelligent feedback and conclusions, or at a minimum, at least be able to show the customer trends and let them, design their operations around those trends.